This potentially had a big character change on earning, huge gap, pulled back, filled it. First touch of it's 50, 200 MA turning blue, which means uptrending for a month. Okay, first time I was looking at it's right here. This is an okay pullback buy right here, inside day. I say inside day a lot, but if you scan for inside days in the market, you'll get thousands of stocks that had inside day. So I don't scan for inside day. I find the stocks that I would like to find an entry in. And if those stocks put an inside day, depending on where that inside day is, I'm interested. Inside day for me is a pivot of itself. If it's in a place where I have seen it before thousands of times, that works. So that takes experience, because I see a lot of people just go and scan for inside days, right? That's not how I do it. So when I was watching this pulling back, you got your uptrend, got your pullback, and then I'm looking for a resumption of the trend, okay? And I want to buy it here, turning back up, okay? And this is what this was doing. And this almost bought it here, but I didn't. I don't remember what was going on, but it was very early still, a little choppy here on the 50. So I did not, and I've never traded this. I did not buy it. I didn't like how it was going back here. You know, for me, I wanted a little bit, one more correction here. So like if this pulled in 1 or 2 days down here and then turned back up, I would probably bought it. I didn't like this. And this is the thing about, you know, being picky, right? And waiting, is like you're gonna miss a lot of these, tons of them, and that's okay. But it's hard to do, right? It's hard to sit and see you waiting for something that you want to see and doesn't happen, and then you miss this one, you miss that one. But I do a lot of trades, so there's a lot of them that does set up the way that you want. So this really did not just give me that this last check in before it took off. So I didn't trade it. So this entry here, the person that submitted this says you sell too soon. Here's the thing about selling here. I think you got to ask yourself, why are you selling here? Like, here's your high, right? Here's your previous high. When you take a trade, right? What was your plan? You did okay buying here. Not a horrible buy. It's fine. It's okay. But what was your plan? Like, what was your plan to sell for 2%? I mean, I don't know what is that. Well, that's 4%. But I mean, you're risking. I mean, if you're gonna put it here, you're risking 5, 6. So it's not even 1-to-1. Like, if you didn't sell here at the previous high, why are you selling here? I'm pretty sure that was not the plan, right? This was just, okay, this is just bad day, I'm getting out, right? I don't want to take a loss, okay? But if you do that for a lot of your trades, you're not even a 1-to-1 trader. Just move it to break even. Just protect your line. Move it to break even, right? What was your plan, right? For me, if I took this trade, I would probably sell something at the old high. That's the plan. I know I want to sell something at the old high. And if my plan was not to sell something at the old high and it stopped pulling back, I would just put stop break even. A good example is, what did I trade? IoT. Right? I bought this stock here. I still have my marks. Right here. Inside day, pullback buy potentially, a little bit aggressive, bought it over the high. I didn't sell anything here. I mean, my plan was to sell something when it hits the old high, just unload 30% of it, 25% of it. But when I had those big 2 days, I moved my stop to break even, just a little bit under break even actually. Well, I stopped out at the open. So that was up 8%. My stop was below the low of the inside day, was 5%, a little bit over 1. But too early to take profits. Here, and then taking profit up here a little bit, that's 17%. That was my plan. I wanted to sell something, not all of it. Comes back, takes me break even. I'm not looking for 2%, right, and 3%. It's just not going to pay. And you know, definitely this sale was just a, you know, panic sale. I don't know where that tick went. Just afraid that this is, you know, going to take the money away from you, and you've decided to take the 4% and just call it good. Here's the thing about this, right? This is wedging up the previous high. What did I just say a few minutes ago? Wedge is often correct. And if you look at this,
that's a really good point. It's a really good point, man. You know, Bill talks about it as, you know, straight off the bottom. And, you know, he always, you know, when you come off the bottom like that and you're trying to blast into new high ground, it's just the stock needs to rest. It's going to correct and form some sort of handle. And so you can see this little stop out. This was, you know, could be a little handle to that base.
Exactly. That's where I was going. This is, if you just zoom out a little bit, see a couple with handle. So the person that sold it here was part of the shakeout. And that's why these patterns, when you give them time to do what they're supposed to do, they strengthen. So this person sold really at a pullback to support. And that's why you just need to figure out what is your plan. You know, sell a little bit over previous high and hold through the next pullback. Can it go all the way down to stop you out? Yes, it can. So that's how I would have handled this to help you hold for longer, sell some at previous highs, move stop the break even, and let it stop you out. This one here is also no one traded this one here. I almost bought it here. I bought something else that day. I almost bought it here. This is an okay pullback buy, new high, pulling back, and it's really still pulling back to the previous base. And you can, you know, pick it off of the 21 EMA. I don't buy them falling down to the 20 EMA like you've noticed. I need them to pause a little bit. Low volume, almost inside day on the 21 EMA. I am gonna risk, you know, 2% to know if I'm wrong, if I'm right or wrong. 2%. That's what I want to do. I'm risking 2% to know if I'm right. This one here, I wouldn't buy this one here. The person bought it here, sold it here. Again, what's the plan? This is not really enough here. And then you have your 10-week MA below you, your 50 MA below you. It's, you know, volume drying up. This is just too tight. And then I think the question is, the reason why I didn't buy it here, the reason why I didn't buy it here, or I didn't buy it here. For me, I ask myself a question every time I look at a chart, right? I missed it here. I missed the handle pullback. I missed it here. I missed it here. Why do I want to buy it here? I've already had 4 chances to buy this stock. I just let it go. And DKNG was on my list. That every day I looked at it. But I hesitated here. I didn't see this. I didn't buy this. I didn't buy this. So I'm done. I take this as a learning opportunity.
There's a good opportunity here to go back. So there's a question in the chat. So go back to the base that we were looking at, the little cup, the original cup with handle. The original one, back to the left, yeah. So, you know, somebody said, well, are you saying, you know, buying on the right side of a base is not advisable? And that's not what we're saying. Because if you think about it, that buy, little green dash in that base, you say, that's a pretty good buy because you've avoided the crowd that's going to be buying the breakout. And so you're positioned pretty well here. And, when the stock breaks out and it kind of pulls back in, you're not under, you're not under tremendous pressure yet, because you bought in the base. If you can find a really clear pivot in the base that really has, wound up a little bit and the volume's drying up, we're not saying don't buy the right side of a base. It has to just be proper.
Yeah, no, this was a good buy. I didn't buy it. And here's what I was looking for. This is a really good buy. This is your volume breakout on earning. And then you're really pulling back, consolidating around the 50 MA, and you're turning up on really, really, really low volume and no distribution. You've got a couple days here, distribution right after the earning gap up. That's what the red stuff is. It just tells me high selling, closing at the bottom third of the candle. Those are distribution. For me, that's why I count them red. I need to see some distance away from distribution bars when the setup happens. I have that, right? No selling happening while the consolidation is taking place. Positive. Up down ratio is 1.3. Positive. OBV is trending up and holding. Positive. RS against the market is blue. Positive, right? So all of these check marks, you have to have something on your charts to get you to check, right? This right here, the circles over here, volatility contraction, right? DTM squeeze. A lot of people know DTM squeeze. This is just telling me Bollinger Bands are going inside of Kettler channels, custom indicator that I put. So we're having a squeeze here. I'll talk about the other ones later when we have time. So this was a good trade. What I was looking for is, this is the first drop. This is the second. I was looking for one more. Okay, I needed that one more check-in, shake out a few more traders, and then move on. Didn't happen. I missed it, right? So going back to this only have two, obviously, but more often than not, you have the 3, 4. But that's what I was looking for. I was looking just one more check-in. I didn't like the way it's doing that. I wanted to check one more time and give me that third contraction, and then buy it. And that didn't happen. I should have bought it. I should have really noticed this, and I never did. So I missed the trade.